Welcome to the Mike Smith Investment Show. I'm Michael Smith. I'm a sophomore in college studying finance. I am by no means a professional. If you want professional investment advice, I would seek someone who's educated in the field. I'm here just to discuss companies and my investment strategies to other investors. So today we're going to be talking about Nike. Shaky stock for the last 5 years, but I think we could potentially see a outcome. Everyone knows Nike. It was founded by Phil Knight in 1964 in Eugene, and it had its initial public offering in December 1980. I would definitely recommend reading Shoe Dog. It's a phenomenal book, but if you haven't read it, they outsourced the manufacturing of its products to Vietnam, Indonesia, and China in the Asia region, which could definitely hurt them, as I'll later discuss, through the tariffs that could possibly be imposed by the Trump campaign. But they first started off in Japan, I believe, but now they've kind of shifted their focus more to Vietnam. Could be due to lower expenses. I'm not entirely sure, but those percentages are where they outsource their manufacturing. Nike also owns Converse and Jordan. Converse has been declining in sales according to the 2024 annual report. Jordan has been increasing in sales, but nothing to get too excited about. Both of these companies aren't really that important for Nike. It's really Nike itself that makes most of its revenue. And the main competitors are Adidas, New Balance, Lululemon, a couple other ones. But Lululemon's definitely an up-and-coming one, also on the New York Stock Exchange. And we'll later see how Nike has kind of a one-up on Lululemon, but they're constantly creating new products. They have a very, very well educated team, creating new and engaging products for customers in the sports field. The past 5 years, it's been declining pretty significantly, around 60% decline. 5 years ago, if you were to buy 10 shares, you would have a negative profit of $319.10, a negative 31% decrease, which is terrible. But if we look at the Dow Jones U.S. Footwear Index, it's also been going down. This is in part due to COVID and just the economic wake that followed, and consumers are spending less and less on kind of materialistic goods. So that whole sector has been kind of struggling a little bit to regain its footing. But in the case of Nike, it's a little different. In 2017 or before the pandemic, they decided to shift their focus more on online and retail stores. This was in part due to them trying to increase their profit margin. This did not work at all, as you can see by the 60% drop. They were missing earnings, and in 2024 to 2023, they experienced a negative 1% decrease in North American sales, which isn't that significant, but we'll see that. Even though they are increasing their revenue and coming out net positive, they still are kind of struggling to get a good net profit margin, a good strong revenue growth for each year or each quarter. And yeah, them not focusing on these wholesale accounts makes other businesses in this sector, their competitors, kind of fill up their shelf space. So we'll see that they really need to regain their connections with these wholesale accounts. Looking at the discounted cash flow model, which I will create another video on in the future, but they are extremely overvalued. Intrinsic value of $10 billion, and with a 30% margin of safety, that's $7 billion. When looking at the market cap, it's $105 billion, extremely overvalued. It's another reason why you can't just look at the profit to earning ratio, which a lot of young investors or people who aren't too educated in the field look at to try to value a company. It doesn't tell you anything. I think their profit to earning ratio is like 23, which would make them overvalued. But I have other companies in my portfolio that are 23 and they're undervalued, so they're overvalued. Um, that just that doesn't help my consensus on buying this company, but that's just something I definitely wanted to add. If we look at ratios, their net profit margin was 11%. That was a 1% increase from 2023. Not big for a company like Nike. Should be a lot higher, but this is in part due to them focusing on their online and retail sales, which did not pan out how they wanted to. They have somewhat of a high inventory turnover ratio, I think, just because they have so much of their products spread out just across the world in different continents and in just different sales channels in general. The return on equity, though, is 40%, which I really like to see from a company. Return on equity is very important. 40% is a super strong number. Their free cash flow margins 97%, but currently with their trailing 12 months, they actually are have a lower cash flow than 2023 or 4. So they're declining their cash flow. Not something I like to see at all through a value investment strategy. But just looking at these numbers, they're pretty strong. And I like them. If we compare that to Lululemon now, a little bit different of just how that company operates compared to Nike. Lululemon doesn't really have too many wholesale accounts, if any. I'm not sure. I haven't done a full in-depth analysis. But I think they just focus on retail stores and online sales. So they have a net profit margin of 16%, a 5% difference between Nike. Lower inventory turnover ratio, but Nike has their products spread out across a lot more sales channels, so they're able to kind of turn over that inventory a little bit quicker than Lululemon. Lululemon's return on equity is 36%, and their free cash flow margin is 63%. And just wanted to add this just so you can compare and see where Nike sits compared to a different competitor, and in this case, a competitor that is in the New York Stock Exchange. But I may do a analysis on Lululemon. It's an up-and-coming business. I haven't really read too much into their business model, but from what I just see from a consumer lens, like I already stated, they don't really do any wholesale. I don't think they do any wholesale accounts, actually, now thinking about it. And, I mean, if they were to do so, I think they would make a lot more money. And these ratios could be a little bit higher, but Lululemon definitely up and coming business. I see a lot more people buying and using their products. What can we expect for the future? This is probably the best part of Nike. Elliott Hill got appointed by Phil Knight. If Phil Knight's appointing a CEO, the founder, I think he definitely has a lot of confidence in what Elliott Hill could do for the company. And Elliott Hill has been working for Nike since 1988, so he has a really strong relationship with the brand. Definitely knows how the business operates for sure. He states, "We will put the athlete at the center of everything we do. We're a company of dreamers, optimists, and inventors, and our eyes are on the future. We're going to simplify and go." Quite a cliche quote, but I think he really has a passion for kind of rebuilding this company from its past negative growth that it's been experiencing in the last 5 years. He's also stated in the 2024 annual report that he wants to rebuild the relationship with the wholesale accounts, which I really like to see because that could really influence higher revenue growth in the future for Nike. In 2023, they also announced a multi-year initiative aimed at cost saving, which they're simplifying their product assortment, increasing automation, streamlining, and leveraging. This can um, has worked. As we can see, expenses are lower, but they're not significantly lower. But I do like to see a company being aggressive at cost saving and decreasing their expenses, which just makes the ratios even more attractive, as well as increasing their revenue growth more rapidly than they have in the past 5 years. Risks. These are more external risks, and they're not necessarily something that you should be too worried about, but I just wanted to add them in. One that is very dangerous for the company is the Trump's administration trade policies. Trump has mentioned putting tariffs on China per se, and they outsource their manufacturing a good amount in China, a good amount in Asia. So if he starts to put these tariffs, that could not be a good thing for Nike because they rely a lot on this outsourcing manufacturing in Asia. Um, but we'll see how that pans out. I think just that's another video for another day. But I don't think that it would be too good for the economy or really most companies because they do rely a lot on non-domestic um, non-domestic work forces, I guess per se. But there's also the risk of fluctuations of foreign currencies such as yen. This one's not too significant. They've been dealing with this since really the start of the company. Um, but it's important to put in if we do see high fluctuations in yen to the U.S. dollar, vice versa. Um, I think it could be a short-term negative outlook for the company, but they have strategies. They use hedging, much like other companies, and I think they have a strong footing on that risk. Their retailers and manufacturers in the past have experienced severe financial difficulty. We see this through wholesale accounts and just other outsourcing manufacturers in the uh, Asia area, and I don't think this one's also not that big of a risk. Most of their big retailers, plush manufacturers have a very strong footing in the market right now, and they've been working with them for uh, multiple years, if not decades. So this one, isn't that big of a issue. Um, they also could experience fluctuations in raw material prices, which I think they've kind of also been experiencing, but it's going to continue to go up um, as they get more and more or less and less abundant. But which really affects most companies in this sector. So overall, the Elliott Hill's new emphasis on regaining the footing with their wholesale accounts is very attractive, and this could definitely influence positive revenue growth in the future. I really like to see that he's now focusing on the wholesale accounts because obviously their past strategy did not work at all, as we can see by earnings and their stock price. Uh, Elliott Hill's also a really strong CEO, and I think he does have a really uh, big passion on Nike and creating a strong company for the future. They're constantly developing new products, and they're definitely outpacing the sector. If you just look around on people's feet or just what they're wearing, I mean, Nike is everywhere. Just count next time you're in a store or something, count how many people are wearing Nike. I mean, a lot of people know this brand. They have valuable customers, loyal customers, and you can almost find Nike in almost every retail store. So that just kind of tells you how much they're trying to push out their products and make revenue. They have a extremely strong brand image. They have people such as uh, LeBron James, Serena Williams, Tiger Woods, and they've always been very strong at their um, and they've always been very strong at their marketing, always making good commercials. So I think that's a really it has always been a strong aspect in their business. Um, and yeah, overall, I think they have future growth opportunities. The stock price right now is discounted severely. It's still overvalued, but it's been dropping 60% since its peak. So you get a really good discount. This is definitely on uh, my my looks for buy and hold. A little bit more of a riskier company. Would like to see what they do in quarter one of 2025 for uh, earnings and revenue. But if Elliott Hill says what he's going to do and rebuild that footing with wholesale accounts, I think that they have strong a strong future footing in the market. So thank you guys for watching. Videos every week. I am going to try to start to put out a podcast. Again, I'm no means a professional. If you want professional advice, go see someone who is highly educated in the field. I'm just here to show you guys what research I have found and the companies that I think could produce a high ROI for you guys. So thank you for watching.